Yo people, welcome back to the channel again. Today we're going to be talking about how to set your stop losses and your take profits in the market. So firstly, I got to mention, when you're setting your stop losses and your take profits, you want to make sure you're doing it in line with market structure. Market structure is key in the market. You can't be setting your stop loss based off a level that that's how much you want to lose in the market because you're over risk or any other nonsensical reason. It has to be based on market structure. Your take profit, that's a bit different. That depends on your strategy. It can be based on market structure. It can be based on maybe an indicator or something else like that. Or some people don't even set take profits. So that's kind of up for you to try out and see what works for you. But your stop loss, it should always be based on market structure. So let's get into the video. And I'm going to show you two different scenarios. I'm going to show you stop loss placement and targeting in a ranging market, as well as stop loss placement and aiming for a take profit within a trending market. So let's start with that, the trending market first. So as you can see in this example, price is clearly making higher highs, higher lows. We know a trending market is categorized as higher highs, higher lows, and we want to capitalize off this now. We want to wait for the correction for a potential long, aiming for continuation. So what can we see now? Here is where the little nuances come into play. So you can see price there has had a bit of a wedge. We've had a breakout, clean breakout, what we want to see before waiting for that retracement. And then we can start adding like levels of support and resistance. You can see price is coming to a level of resistance up in here. So that's also adding to, okay, we potentially could get a correction. And then obviously we've got a level of that we've just broken out of here, very clear. So now you've got that on. Now we wait for a correction so we can look for an entry to capitalize off this uptrend. Let's say we play it forward. We can see price is retracing and correcting. We'll be looking for our entries at this level of support. This is our level of interest where we're looking for price to come to. So once price comes to this level, we'll be waiting for our entry signal and then we look to get in. So I'm gonna go over to the 1 hour and show you exactly how I would get in once my signal is placed, how I'll set my stop and how I'll set my target. Okay, my signal has now been put into play. What we can now do is set our stops at the low. The reason why we set our stops at the low is one, what do we see? We see we've got a break of structure. So clearly on this correction, which we was obviously waiting for, price has corrected back into our level of support. We've then broken structure back to the upside. That's what we want to see. We want to see a break of structure back to the upside. With that break of structure, now we've got to ask ourselves where we want to place our stop loss. It's got to be in line with market structure, like I said at the beginning of the video. So we've broken structure. Where is our structure low on the 1 hour? It is here. So we can safely put our stop loss there. If it does get tapped, then it is what it is. We just got to move on. But this is a great trading setup. Stops at the low, we've broken structure, clear break above structure. Now we can get our entry, like I said, stop loss place. Now I'm going to talk about where we put our target. So because we know the prevailing trend is in an uptrend, we know we was getting in on a correction and we're looking to ride this trend upwards in a continuation. We're going to look to set our targets back to these highs because the trend is your friend to the end. We don't know if price is going to break above this high really and continue higher. So we've always got to play it market structure by market structure. Now here's where I talk about this is up to your preference. You've got to figure out what you like, because some people may aim for here. Sometimes I may aim for here. You can take a portion of your position off and you can aim for higher. And using maybe a fib extension, like a 27 extension, you can potentially aim for higher there. So at your first level, you can take off maybe 50% of your position, take off 80% of the position, however much you like, and then hold the remaining position to wherever you fancy, 27 extension, 61.8 extension, or maybe another level of resistance up there. Like I said, this is up to people. This is up to you. This is what you got to forward test and back test and see what works for you. So let's go out and see how this scenario played out. We've obviously pushed, hit our TP, it's gone on to hit the 27 extension. So if you held onto the 27 extension, you could have got a 3.51R. If you held to just that high, could have got a 1.86R. Let's see if it runs any further. It came a few pips shy of the 61.8. Maybe about 3 pips. And then it actually smashes it. So it's made a higher low, smashes the 61.8. Does it run any further? Still runs up into this next level of resistance. So that's 7R right now. And then there is where we start turning. I remember what happened here. We had a range and then we reversed. So that's why I say setting your take profits, it depends on what you forward test, what you back tested, and what you're comfortable with, what type of trader you are. So if some people might want to swing, hold this, it ran all the way for 7R. Some people like myself are more conservative. I'm looking to get out there and potentially hold a bit of a smaller position to the first 27 extension, but you see how it's run. It ran for 7R. So that's trading in a trending market. Now we're going to head over to how we trade in a range, because it's totally different. Okay, now I'm going to show you a range of market entry. So we can see that price has been in a clear uptrend. Prevailing trend is bullish. Yeah, price is moving up. But right now, price is in this range. And we know price is in the range. Why? Because price has tapped the highs of the range twice and the lows of the range twice. So when looking to trade a range, you want to first determine, is it a range? And this is what I use to determine whether it's a range. I need to see taps of the highs, the range resistance twice, and you see taps of the lows twice. Once it's tapped twice, highs and lows, then I can trade it as a range successfully and then look to trade to the top of the range, or if I'm in a bearish market, I look to trade to the bottom of the range. So in this scenario, I would head over to the 4-hour and then we can look for an entry. And then what you can see here is we've got this reversal forming at this. So we've had this tap this level of support and we've got this 4-hour head and shoulders forming. So what we'll be looking for is a rejection from this level of support, and then we'll be looking to trade it to the top of the range. So when you're trading ranges, if we're at the bottom of the range, you're simply aiming for the top of the range. If you're at the top of the range, you're aiming for the bottom of the range. That's how we target. We have a fixed target because price is in the range, it's moving sideways. Just wait for our confirmation. All right, boom, we've got our confirmation with a rejection of this level of support, and it's potentially forming a head and shoulders on the 4-hour. So now you can put our stops at this low, because we know price is potentially forming a head and shoulder. So if price is to respect this head and shoulder, we shouldn't break below this low. Boom, boom. Head here, left shoulder, right shoulder. Here's the lowest point of that head and shoulders. Here's the lowest point, the left shoulder. Here the wicks come down to there, so that's where I'll safely place my stop, and then be looking to trade it to the top of the range there. So let's see how the price played out. So you can see we first found some resistance at this 4-hour resistance level, came back into support, and then eventually broken above structure, made a higher high, and then ultimately pushed back into the range resistance. So as simple as that, I showed you how to set your stop loss and your targets in a range of markets and in trending markets. So I hope this helps. You lot can learn from this and enjoy the video, man. Other than that, catch you on the next video, man. I'm out.